Hi and welcome to the Market View. Bill isn't here this week, so I'm here today with Angus. So last week we saw quite a quiet week in the markets, but this week obviously it's kicked off quite a bit with Cyprus. What have we sort of seen been going on, and do you see a solution coming anytime soon?
Yeah, well, certainly this week has been a lot more exciting, and we saw Bill fall asleep twice in our video last week, and I think that obviously he's so excited that he can't actually make it in to the office. But yeah, certainly things with Cyprus, and there are some real concerns surrounding that issue, because of course the point being is that their banks remain closed. They're trying to raise funds via various means. The first attempt, which was an indiscriminate tax on bankers' deposits, was voted out by the Parliament, so they're having to look at other solutions. Do they get money from Russia? So if they do, what does that mean for the Eurozone? Will Russia potentially be the saviour of the Euro? Do they get money from the Eurozone? All these sort of conditions, all these things are going to have strings attached. There's going to be stringent rules as to how the money will be repaid and what sort of austerity they will have to apply to their economy and things like that. So we're in this period of great uncertainty, and whilst the markets have held up really quite well, they are selling off now at the moment, and they're looking decidedly nervous. Investors are now looking decidedly nervous, and as we speak the euro's just coming off a little bit and things like that. It's because of this uncertainty. We don't really know what the end game is at the moment, and they're saying that they're going to keep the banks closed until the middle of next week now. Now, if you were a saver who'd had your funds locked up for over a week, the moment those banks open, you want to get your money out.
Yeah.
So they need to try and prevent a run on the banks, and so it's looking really difficult. Now, why does Cyprus matter? Cyprus purely matters only because it is a member of the Eurozone. If there is no resolution and it defaults on its debts, that means exit, and that could be catastrophic for. We've never seen that before, so does that mean that Greece can exit and other countries can exit and things like that? Will there be a bigger breakup? So, whilst it's been a more volatile week, it's certainly been a more interesting week, and clients have actually done quite well at the moment. They've sort of been on the right side of things. So, whilst it may be bad news, let's hope for more action, and that's what we're seeing at the moment.
Sure. Also yesterday we saw George Osborne come out with the new budget. The papers are sort of branding it as the Drown Your Sorrows budget, but what we sort of noticed is that they failed to mention on the front pages how the actual change in the remit, which hasn't happened since '97, and no one seems to really be taking that much interest regarding sort of the remit change. How do you think that's going to affect the markets?
Yeah, that's a good question actually, because you're right. I mean, I suppose buried in the small print is the fact that he is just positioning the Bank of England slightly differently. And on the face of it, the reason why the papers haven't sort of mentioned anything like that is because ultimately that's not what voters are interested in, is it? And it's not what people are necessarily interested in. They don't really particularly sort of understand necessarily what the Bank of England's role is, or what quantitative easing thing, what that means and what it does. So it's no wonder there hasn't been much coverage over it. But what he is doing is clearly changing the way the Bank of England will work, and I think he's paving the way for the new governor who's coming in, Mark Carney, in the summer, to potentially boost monetary stimulus further, and I think he's making that easier. So we'll have to wait and see really to find out more detail, because he didn't really sort of give much actually during his budget speech. He left the door very much wide open as to what to do. The budget as a whole, good bits and bad bits really. I suppose probably more good bits than bad bits this time. And it's nice at least to have a budget that hasn't got a granny tax to talk about or a pasty tax to talk about or something like that. It's actually got some relatively palpable growth measures in there.
Yeah, it felt like quite a strong budget yesterday. Yeah. I think people were quite surprised that he sort of came out with guns blazing. So yeah, that's good.
Exactly.
Yesterday evening we also saw the Fed, Bernanke making his press conference after that. It was relatively uneventful, sort of left things unchanged. But how do we see it affect the markets in the US?
Well, it was quite muted, wasn't it? I mean, you're right, there wasn't really much to be said. They didn't really sort of give any indication as to any change from the month before. So, you know, market's very much expecting, you know, 85 billion in total sort of QE per month until 2015. And no one's really kind of, as a result of that, changed their forecasts to the reduction in unemployment as a result of that, because of course their big target is 6.5%. So nothing really changed. I think that, you know, the market's really focusing on Cyprus at the moment. So yeah, it's definitely a very uneventful event.
What sort of activity are you seeing with your clients this week? Where are they focusing their attentions?
Well, they've been trying to buy the sort of dips in the euro, you know, but certainly on the index front, they've remained very bearish of the FTSE. And whilst, as I say, the FTSE's been quite, you know, resilient, just that weakness is coming through today a bit, and so those clients who've remained, you know, pretty short are just seeing finally that their you know, their positions paying off a bit.
Yeah. Great, thanks for that, Angus, and we'll see you next week.